Corinthians chapter 4, verse 1 and 2, saying that financial is not a forgiveness. Hey there. Welcome to the Radical Godly Stewardship Podcast. I am Dr. Lexi Johnson, and this is the place where heaven's economy collides with Earth's assignments. And I am your host, as mentioned. I am your financial rebel, your kingdom disruptor, your accountability coach into obedience. Because around here, we don't beg God for money. No, that is not what we do. We align, we obey, we produce, we multiply, and we dominate. And if you're ready to steward well, think boldly, and build kingdom wealth, then you are in the right place. Happy Thursday to each and every one of you. I am excited that you are here. Do me a huge favor. If whether you are watching live or watching the replay, let me know who you are and where you're watching from. I always love to acknowledge those who take time to join me here on this broadcast. So, what are we talking about today? Well, today, family, today, Money Masters, we are unpacking three big economic forces that are impacting people's money, the markets, and people's mindset right now. And those three economic forces are number one, the Federal Reserve's decision not to cut interest rates. Number two, the federal leadership change. Trump is nominating Kevin Warsh. We'll talk about that in a moment. And the recent intentional crash in gold and silver prices. Now, these are not random financial stories. They sound like they are, but they're not. They are signals in the global economy that influence credit, they influence markets, portfolios, and your household finances, whether you know about it or not. Right? Whether you care about it or not, because some people are like, oh, I really don't get into all that economic news and the markets and this and that. But the truth is, you should, because just because you're not interested in it doesn't mean that it does not affect your pockets. Okay. All right. So let's start. We're going to talk about the current Fed decision not to cut the interest rates yet. All right. At its January 2026 meeting, the Federal Reserve left the interest rates unchanged at 3.5 to 3.75%. They paused further cuts after they did three rate reductions in late 2025. So I think most people thought naturally they were going to do another rate cut, right? Do it, again. Because they had talked about in the past that they wanted to lower interest rates, but they did not do that in January. Markets had hoped for the additional cuts, and they're still hoping for the cuts soon, but it hasn't happened yet. Okay. So why did they make this decision? Let's talk about it. Inflation has eased, but it is still above the Fed's 2% target, right? Labor market weakness was mild and non-dramatic. This is, of course, according to the reports that they are looking at. And another reason is that policymakers judge that the economy is on a firm footing. That's what the policymakers are saying. And then two Fed officials even preferred cutting sooner, right? But that is not the way all of the officials felt. So that showed that there's some kind of internal debate that's going on about policy direction. So what does this tell us? Okay, because this does tell us something, and something very important. It tells us that high rates aren't accidental. They are intentional until inflation and economic data move clearly towards the Fed's goals, right? So, what does it mean for you? What does it mean for me as individuals? Well, it means that our borrowing costs, and when I talk about borrowing costs, I'm talking about credit cards, mortgages, auto loans, those types of things. it means that those costs are going to stay relatively high, right? And we obviously, that is not good news for us. But at this moment, those rates are going to stay high. The second thing is your savings yields might stay okay, but they won't be extraordinary. So we have been talking about your high yield savings accounts and how those interest rates might go down as the Fed brings down the interest rate. So because they did not do this next cut, that means your savings yields are going to stay okay. They're not extraordinary right now, but they're going to stay okay. Else does this mean? This means that businesses face steady capital costs. And it also means that consumers might feel the pressure of the rates being stuck at a high level, just as because the prices of things are going to remain elevated, right? So, as kingdom citizens, what do we get from all of this? Well, this is what we as kingdom citizens need to understand. We are not to expect, we are not to expect cheap money to solve our financial issues. Okay. Some of us sit around and we're holding out for these Fed cuts. And the truth is, they may or they may not come. Okay. So we cannot hold out for that. Stewardship isn't about borrowing more, stewardship is about strategic discipline and having that strategic discipline now so that you don't need to borrow later. All right. So, this is a really great time. Again, if you were looking at making huge purchases, and I know this is like tax season too, where a lot of people who don't think strategically about their money are like, okay, some people, right? We're getting this influx. And so, let's go get all the major things. Let's go get a car. Let's go get listen, take your time and think these decisions through, not just about your short term, but you have got to think long term as well. Listen, I know some of you are facing some things like that need to be resolved right now, right? This old junk car, it's just, putting too much money in it and all of that. All I'm saying is weigh it, right, with what's going on. Because again, you don't want to get yourself into something that later on you're going to need to borrow something to get out of, or, end up with things being taken back. All right. Because shifts happened in the economy that you could not handle. All right. Now I want to switch gears just a little bit. We're still talking about the Fed, but I want to talk about this regime change that is on its way. And who the heck is Kevin Warsh? Okay. And some of you are like, the Fed, what is that? And whatever, right? I'm not here to talk deeply about the Fed today, but the Fed, the Federal Reserve, all right, they are the ones who control the policy about money. Okay. So all of these rate cuts and inflation and all this and that, that is all controlled by the Fed, the Federal Reserve. President Trump has nominated Kevin Warsh as the next chair of the Federal Reserve. He will be, if he is approved, right, he will replace Jerome Powell when his term ends in May. All right. So we are not that far from May. So I'm paying attention to this, closely. So who is this Kevin Warsh, right? Have we heard of him before? Like, what is going on? His name seems to come out of nowhere, but he doesn't come from out of nowhere. He's a former Fed governor from 2006 to 2011. He served during the financial crisis. He is a market savvy policymaker with both central banking and private sector experience. He's known for advocating monetary policy reform and strong communication within the Fed system. And reportedly, he is supportive of lower interest rates. I guess we'll see, right? If he gets in, what happens? But it states that he's supportive of the lower interest rates relative to Powell and aligned with Trump's growth oriented goals. So I don't know. We'll see, right? So, how does the president, if the Federal Reserve is not an entity that is run by the government, how does the president get to nominate the Federal Reserve chair? I'm glad you asked. The Federal Reserve is not technically a government department, but the president does nominate the chair, and the Senate has to confirm that nominee. The Fed operates with operational independence, but its leadership still flows through constitutional appointment authority. Yep. And yes, politics plays a role in that process. And, I guess it's like that for sort of some checks and balances, right? Um, but then that shows that the president even has influence to a degree with what goes on at the Federal Reserve. So, what does this regime change mean? Well, when experts talk about a regime change, they are referring to a different philosophy on interest rates, a potential new coordination with the Treasury, changes in how the Fed manages its balance sheets, and possible shifts in bank regulation and monetary communication. So, in English, what does this mean? What can it mean? It can mean faster rate cuts, it can mean more flexible policy, and it could also mean a focus on growth over inflation control. But even if Warsh is confirmed, he still must work with the FOMC, which is a group of 12 policymakers. So, again, one person doesn't decide everything alone. All right. And that's a great thing that one person doesn't get to decide everything alone. And also, it depends on who those other people are that he's making decisions with, right? So this is going to be a very interesting change. And I think one that we're going to have to wait and see how it plays out, as in almost, anything, right? Okay. Now, you know what we did not do? Um, we did not do our stewardship check in. We did not do our stewardship check in. How are we going to how did I miss that? All right, so let's do our stewardship check-in at the end, and let's keep moving. All right, so the next thing that I want to talk about now is the sharp drop in the gold and silver, right? Last week I talked about gold and silver, right? And I talked about how the prices had went up, there was a spike. And now, right, what do we see? A few days after that, or um, or maybe not even a few days, but a few days after that, then we saw, well, a few days after that, we saw this sharp like drop, okay, in gold and silver. After, right after the Warsh nomination news, gold and silver, which had been at historic highs, it plunged rapidly. Okay. What did investors see in their gold and in their silver? Well, they saw gold drop roughly 10% and silver dropped 15 to 28% in a short span. And they also saw a broader commodity sell-off, right? That was tied to a stronger dollar and easing geopolitical intentions. So that's what was underlying all of that, right? Um, I want to say something. I was sorry, headed one one direction, which I'm going to come back to, but I want to say this. For investors, when we see these sharp declines, we are not initially panicked. We're not panicked at all, right? Because we've learned how to take advantage of the ups and the downs. When they say the market crashes, because they use the term crash, you think, oh my gosh, such a horrible thing, right? But the truth is, what they're saying is that the prices have dropped really low. Now, that's not good if you were planning on selling that day, right? Not good. But for buying, it's good because it means the stuff is on sale. You can get more of it for your money, right? So I just wanted to put that in there. This way, when we hear about markets crashing and markets spiking, then we understand what really is going on. Okay. Likewise, if the market spikes and the prices go up, good for people who want to sell that day, right? But if you want to buy that day, it's going to cost you more to buy it that day. Does this make sense? Okay. Drop one in the chat if this makes sense. All right. Now, let's talk about why this happened. There were several forces that converged that allowed for this to happen. One, the dollar. Okay. So the dollar it was stronger that particular day, those couple of days, or whatever the case may be. And that made precious metals less attractive to the global buyers because remember, precious metals is to hedge protection because the dollar is going down in value over time. Okay. So they saw that the dollar was doing a little well that particular day, and so therefore it was less attractive to um, buy precious metals. Now, these are people who like trade day in and day out, right? These are not typically for people like you and I who are in it, for 3 to 5 years, 10 years and beyond, so on and so forth. But the people who are in and out of the markets every day, they cause these, kinds of shifts based on some of the things that I'm getting ready to share with you. Okay, so I need you to know and understand that as well. This is why when I coach people, I say, hey, listen, the markets every day are going to go up, down, up, down, up, down. This is why you don't need to watch it every day, but you do need to pay attention um, on a monthly or quarterly, even quarterly basis to what's going on in your portfolio. Okay. Now, another reason that this took place is that big leveraged positions, okay, margin requirement hikes, and profit taking forced liquidations. Leverage positions, what do we mean? We have some big names, right? Big entities that sold off some of their gold and silver. Okay. That's what we mean. Okay. Um, Profit taking, meaning, okay, people wanted to cash out or whatever, make some profits that day or whatever, that forced liquidation. Okay. So that will drive the price down. All right. What else happened? There was a shift in investor expectations when Warsh was seen as less likely to support aggressive rate cuts. That reduces the safe haven demand for gold or silver. Okay. And commodities like oil and copper have moved lower, okay, as risk sentiment changed. What is risk sentiment? That means the announcements that are made in the news, okay? See, was this gold and silver thing, was it intentional? Because some people were saying, oh, it was intentional. These people went in there and they manipulated the markets and it was intentional. So let's talk about that a little bit. Some market participants talk about manipulation. Financial regulators are not confirming that that was the case, right? So, I mean, and would they? Honestly, I don't know if they would do a lot of that, right? What we do know is that precious metal markets are smaller and more volatile than the stock markets, as I was already explaining. So, there you're going to have rapid swings when sentiment is again announcements being made. Warsh is being nominated as the new Fed. JP Morgan Chase, just whatever. When these kinds of announcements come out on the news, then people feel a way, and then it shows up in how the market operates that day, up, down, right? So those are called sentiment shifts, right? Or leverage positions unwind. And again, what are leverage positions? Again, people who are, have all this kind of, they've got huge money in these areas and they make a decision, right, to leverage the position that they're in. But what does this mean for you? Okay. Gold and silver remain strategic assets. Hear me, they still remain strategic assets. That does not change, especially physical holdings. And we talked about that, having the physical gold and silver, right? But they can also be volatile in the short term. But remember, we don't have gold and silver in our portfolio because we're doing a short term play. No, this is long term because over time, the dollar is declining. And over time, gold and silver keep up with inflation. Okay. A strong dollar often correlates with a risk off um, environment, right? For hard assets. What am I saying? When the dollar seems to be doing well, then people are less likely to be doing a lot with gold and silver, okay, at that particular time, on that particular day, whatever the case may be. These markets with precious metals, they move fast. They don't always move logically, um, but because money is flowing based on sentiment, um, we have these, you know, sharp ups and downs. But remember, we're what I talk about, right, is being in it for the long term. We ain't talking about daily trading and things like that. That's a whole nother area. Do I know something about it? Yep, but that's not where I want to focus. Okay, there are other YouTubers that do that if you're interested in that. All right, so scripture teaches not to put our trust in fluctuating wealth, right? Do not wear ourselves out trying to get rich. Okay. What is the market doing today? Let me move some stuff around today. Let me move some stuff around tomorrow. Let me move some, like, there are day traders and they do that and that's fine, but they're skilled to do it. For the average person, that's you not get don't get in that game. Okay. For people who are close to retirement, don't get in that game. Okay. Unless you have a lot of discretionary money to do that with and your retirement is nice and set. Okay. The markets are going to rise and fall. Central banks are going to adjust to that. The headlines, they're going to excite and alarm, okay, as they normally do. But the kingdom perspective stays anchored. We are about steadfast stewardship. We are about discernment. We are about obedience. We are not about panic and speculation. All right. So, what does this mean for your money? You need to watch your cash flow. Okay. High interest rates means that credit card costs are still a real expense. Okay. So, you need to make sure that you budget for these things. Number two, don't chase short term metal price moves. I've said a lot about that already. Gold and silver should be part of your portfolio. When I say should, understand, y'all, I am not your financial advisor. Okay. I don't know your individual situation. This here, what I'm doing is for educational purposes and financial education purposes only. All right. So gold and silver should be part of your portfolio, but not for, this day-to-day stuff. It is part of just a bigger strategy. And then you should prepare for policy shifts. Okay. We should be paying attention to that more. A new Fed chair means policy uncertainty. We don't know what this guy is going to come in and do. And so we need to not be alarmed or afraid. We just need to stay disciplined. We need to be even more about stewardship, right? And number four, strengthen financial resilience. Your savings, your diversified income streams, your balanced portfolios, all of these things are going to prepare you for the shifts and the changes. Okay. All right. Now let's do our stewardship check in and we're going to get out of here. All right. I want you to ask yourself these questions honestly. Where is your confidence right now? Where's your confidence right now? Are you putting your confidence in the interest rates coming down? Are you putting your confidence in who's sitting in the Fed chair? Are you putting your confidence in gold prices, silver prices, or market movement? Or is your confidence in Yah's instruction, your obedience to steward, right? Your obedience to steward what's already in your hands. I hope that it's the latter, right? Proverbs 18, verse 10 to 11 says, the rich man's wealth is his strong city, but the name of Yah is a strong tower. Okay. So I'll take a strong tower over a city any day. All right. Okay. Um, Another question you can ask yourself is, are you reacting to these headlines and responding, or are you responding with strategy? We have talked before about reacting versus responding, right? So every time the Fed speaks, or every time precious metal spikes or crashes, or every time some kind of new nominee is announced, or we get to an election period, or whatever the case may be, what are you reacting to that news, or are you responding? Okay. Do you feel the pressure to do something, or do you already have a plan? Right? Reaction is emotional, stewardship is intentional. And finally, ask yourself, if nothing changes this quarter economically, okay, are you still okay? If the rates stay high, if the metals stay volatile, if the markets just move sideways, like, are you okay regardless? Do you have margin in your budget? In other words, cushion, emergency fund. We've been talking about that a lot. Do you have cash reserves? Do you have multiple income streams? Do you have a long term plan? These are the things that I hope that you are working on if you do not have them. Okay. Proverbs 22:3 says, a wise man foresees danger and hides himself. The simple pass on and suffer. Okay. So stewardship isn't about predicting the markets, it's about positioning yourself so that the markets don't control you. How about that? All right. Well, let's wrap up and get out of here. If you want help positioning your money, not reacting to the headlines, Financial Rebellion, my 90-day experience, gives kingdom strategy for real economic seasons. The link is in the description. It's bit.ly/ join the rebellion 2026, all lowercase, right? I have kept the cost of that intentionally low. Um, it's normally $3,500, near $3,500. It is only $249. And there are still like payment plan options that you can take advantage of, even at that. So I'm keeping it intentionally low because this is a time where the Lord is maturing people very quickly in a lot of areas. And one of those areas for the kingdom citizen should be their finances, should be your finances. Okay. But if for some reason that 249 even for you is a stretch in this season, that's okay. You can grab a copy of my book, Stop Begging God for Money, at authorlexijohnson.com. All right. And if you need some personalized clarity, schedule a consult. And the link is in the description as well, so that you could schedule a 30-minute complimentary consult. Okay. Well, that is all that I have for you all today. Um, we will see you next time with another episode of the Radical Godly Stewardship Podcast. Thank you for joining me. And don't forget, get out there, produce, multiply, and dominate in the name of our Lord and Savior, Yahusha, the Messiah. God bless. Have a good one.